Welcome to the paradiddly, paradoxically, paradise paradox. My name is Dice. Your name is Dux. Together we are the paradise paradox. My name's Kurt Robinson. Really? Yeah. What's happening?
We're here again.
Here we can. So today we're going to talk about Glencore, this huge prototypical evil corporation that has its fingers in a lot of pies. Oops, getting in the way of your camera there. So the thing about Glencore is it seems to be massively over leveraged, and it could mean that the world economy is hovering on the edge of a precipice, or at least a few countries, and yeah, things looking a little grim. But you know, we try to put together a few pieces of the puzzle and get some analysis and see what might the situation be.
Does it make you feel nervous?
No.
Me neither. No, I don't think so. It's just that actually our first episode we're talking about waiting for this economic collapse, which has happened, and it's well and truly gone.
I mean, a little something has happened. There's been a little dent in share markets all over the world, and maybe we still get to feel the full brunt of that collapse or that correction.
Yeah, whatever that's going to be.
Yeah.
But what it is doing is it's affecting real people that work for these companies, that are investing in these companies. I mean, countries that are very heavily mine export countries like Australia, the Latin Americas. Mm-hmm. Well, I mean, it's all countries are going to be affected.
Yeah. So who's to say exactly what the knock-on effects will be? But we can speculate a little bit about that. So jump on over to Twitter. My handle is @TroubleBubble.
I am @BattleAZ.
And jump on over to Facebook and you press like, press subscribe, press hover over the like button, press get notifications, press like on YouTube, press subscribe on YouTube, jump on to iTunes, Pocket Cast, Podcast Addict, press subscribe on there, leave us a comment on iTunes and give us a review, 5 stars, excellent service, top quality hand jobs directly over the internet, fresh and frothy Starbucks, and
digitally.
Yeah. And where else are you going to go? The paradiseparadox.com probably. It's a good website. I like that one. And you can have a look through a lot of our old episodes on there, but still fresh, still funky fresh and nice and crispy, straight out of the box, just like an internet unboxing, watching a grandmother unbox her new pair of baby booties. And go to donate.theparadiseparadox.com.
People like it.
Oh, yeah, I think so. 1 million hits. Grandma opens her box. And head on over to the donate.theparadiseparadox.com. You can give us a little love on there. You can show us a little support, a little token of appreciation, a little Bitcoin of appreciation, a US dollar of appreciation or depreciation, you might say, maybe in the future. And on the paradiseparadox.com, you look at the top, there's a link. It says shop Amazon. You go on to Amazon, and it just means we get a little commission. So buy a copy of, what did you call that movie? Margin Call. Jim Rickard's Currency Wars.
Should be a horror film, but I think it's drama. In case you can't.
Right. Maybe it will be a horror film. And let's get into it. So I just wanted to start with a little quote, which seems increasingly relevant. So it always seems relevant when someone brings it up talking about the economy. It's a little quote from George Soros. This is from the 8th of October 2011, going back a few years. He said, something similar is happening in the West, Mr. Soros told Bloomberg Television. You had a financial crisis where the market did actually collapse, but it was kept alive by the authorities. People don't realize that the system has actually collapsed. So he's describing the world economic system as like this system of zombie banks and zombie manufacturers or whatever, a whole bunch of companies that are just running on this government debt, just keep getting money, just keep getting paid off and bailed out, and all kinds of twisted government corporate incestuous maneuvers that go on.
Yeah.
And yeah.
That's the end of it. You're ready to throw the quote now?
That was the quote. Yeah.
Okay. So this is it. It's over. We're running on fumes.
Yeah. Running on E. Yeah. Yeah. So that's like the important context to keep in mind whenever we're discussing the economy, because it's always going to come into play in one way or another. And this in the case of Glencore, it comes through in a slightly interesting way. So the story of Glencore in recent months, it goes something like this. I mean, we've been seeing the share price of Glencore drop since the start of the year. So around the start of the year on the London Stock Exchange, it was around 298 points. Now it's around 96 points. So it's making this kind of minor recovery, but you have to remember that when the share price goes down and then takes a little step up, well, it's the same thing when the stock price is going up and then takes a little dip. That doesn't mean that it's going down for the count. Same thing when it's going up and takes a little uptick. That doesn't mean it's making a miraculous recovery.
Although the news might lead you to believe that.
Yeah.
Like when you sent me a tweet. What do you think about Glencore?
Yeah.
Who?
yeah. So I guess we need to start at the start and say, why should anybody care about Glencore? And the reason is because Glencore controls this huge portion of the primary production sector all around the world. They have mining operations in about 50 countries. And if they do go down for the count, then it could spell a lot of unemployment, a lot of problems for a lot of people, mining closures, which then leads on perhaps to problems with manufacturing, because of course you need copper and iron ore to make Chevrolets or whatever. Yeah. Yeah,
they do operate. They're very heavily invested in pulling out these materials out of the ground. I mean, that's as simple as it gets. And all the news comes in to say, okay, well, commodities prices are dropping, and there's many reasons for that. That have nothing to do with what Glencore does. But I'm about to call them the Glencorp, that evil corporation. But that's only because I'm scratching a bit, because I didn't know what they did or who they were or how this is involved. But you jump online and it doesn't take very long to realize that they're in a bit of trouble if commodities keep dropping.
Yeah.
Copper, he says that copper's the biggest loser at the moment.
It's definitely a significant loser. But then there's it's not just copper. It's actually zinc and lead as well. The two significant ones.
Iron ore, petroleum. It's across the board.
Yep. A lot of commodities, a lot of products in primary production. So copper's down about 30% over 2015. So let's see, zinc down about 26%, lead down about 19%, and there's a couple of figures about what's going on here. So obviously, if all of a sudden all of the stuff that you're producing starts dropping, 20, 30%, it's not really looking so good for your revenue.
Yeah, it's not a very comfortable place.
Yeah.
Unfortunately, because of the size of this company, it's starting to shock the whole stock market.
Yeah.
Like it's affecting. It's not just affecting mamas and papas that are investing their supers. Like it's affecting the whole stock exchange, and Glencore at the moment is the one getting the blame.
Yeah. And so the reason apparently behind the commodity prices going down, this is what some speculation has said, and this one, well, I'll put the article in the comments, but the speculation is that it's caused by this strong dollar policy, or it's caused by, I should say, the perception of a strong dollar. So apparently, what's going on? If we join a few dots together here, it looks like people in traders, like this big money that moves around and moves in the entire world, these speculators and people with a lot of money, and hedge fund managers and people who have more money than they know what to do with, they move it around, and when it looks like the US dollar is going to stay strong, they want to put their money into the US dollar. So it looks like they're moving the money out of copper futures and commodity futures in general, and they put it into the US dollar. And another reason for that is not just the perception of the strong dollar right now, because obviously since December 2014, every currency has fallen against the US dollar, so it makes it look pretty good in comparison. It's like the best looking hooker in a retard farm, and the
you want to go for the safe. You want to go for the safe bet. That's the issue. So they would rather. Because this is the thing. It's a problem of groupthink. Yeah. They've all been trained the same. They've been trained to look for the same technical issues, and they all want to save their own wallet. So why stay somewhere that looks like it's going to keep falling?
Yeah.
And if the guy next to you is going to move his money out of futures of copper or zinc or whatever to somewhere safer, then you better move before him. Otherwise, you're going to sell at a lower price, or you're not going to get out in time. So, it's kind of this race against time, which just puts more momentum in this downward spiral for all commodities, leaving companies like Glencore in a very top of the roller coaster. Yeah. And there's only one way to go.
Yeah. The phrase that people use, there's this corporate mentality, like, nobody ever got fired for buying IBM. So if you want to play it safe, put your money into US dollars. Nobody ever got fired for buying US dollars. The almighty dollar, the whole fail safe and hold a steady US dollar. But it's based on this. Yeah, it's based on this this perception that the Fed is going to raise the rates. And so I have this article from the Wall Street Journal saying that 92% of economists expect the Fed to raise interest rates in December 2015. I
think 93 of us believe that's not the case. 93%.
The 93rd, the other 8%. Yeah.
Well, they're not even in the room. They've already sold and gone to the beach because I believe there is very little chance that they just can't. And if they do, well, there's a big risk for people that are holding debt. And I don't know who's holding debt that wouldn't want the interest rate to go up. Yeah. And I think Americans or the US, actually, it's the whole world. It's the whole world. I can't put anyone on that. Why would they be comfortable putting the rates up? Yeah. It's like it just.
Well, look, last time I was in Los Angeles, I remember seeing these posters, and this was in 2013. I saw these posters outside the banks, and it's like, one new car, 2%, or 2.99%. I'm like, holy shit, they're headed for another credit crisis. It's like unavoidable. So if they raise the rates a little bit, all of a sudden people are paying, instead of 3%, they're paying 5-10%, and then everybody loses their house and loses their car all over again. Something like that could happen.
A couple of years ago, before I left Australia, I saw companies like Nissan or whatever, normal cars offering 0 interest rates. It was like, just take it. Just buy the car. It's like, if you got good credit, here's a car, and as long as you keep making the repayments, it'll stay in your driveway.
Right.
Until then, we'll come and collect it and whatever. Like, it's just balance sheets and the automotive industry. That's what it seems like. I mean, we were checking out a news piece, so a 1.5 minute video where the Bloomberg Business News were talking about, we're comparing things like the power consumption of South Africa and in the links, in productivity,
the PMI of China,
manufacturing of Vietnam.
That was such a bizarre article for so many reasons. Well, it's like he's like, everything's going down, and then he just lists a bunch of random things about power of South Africa and the manufacturing in China and Vietnam, but everything is going down except U.S. car manufacturing. U.S. car manufacturing going great, and it's like I have to wonder what Bloomberg's intentions were behind this article. Like they're trying to project a happy image to the U.S. market or something. I didn't really understand it.
Well, I didn't either, and that's why I looked at, okay, how many cars are the U.S. actually producing, which is something like...
You said 4 million, yeah. So it's like half of Japan and like a quarter of... less than a quarter of China.
Yeah. It was like it's next to nothing really in the world scale. And I mean, it's... You can assume that's because you think that the people that are watching this still have that memory of the the 50s and the huge automotive industry that the US had. It's not relevant anymore. Yeah. But it was like the one line at the end, the happy story to end the end the note, just to put a smile on.
It's a little picture of a happy kitten to make your day. Everything's great. That's what it's like. It's like watching the 5 o'clock news in the 90s or something.
And Fireman Sam's the hero. Saved the cat.
Rescued the burning cat, and it only charred a little of its whiskers, and everybody had biscuits.
Classic misdirection.
I have to wonder what's going on with Bloomberg there. There's a whole, we could get into that like whole question of what the hell Bloomberg is doing. Like I think Bloomberg is a trusted source of information because they have like this Bloomberg trade book. So if you're a stock analyst, then you have this like direct connection with Bloomberg, and you just get all these analytics and algorithms and it's complicated swamps and swamps of information that you can use to make some sort of projection. But I wonder.
It's kind of what the professionals use, right?
Yeah. But I wonder how it works. Like, do Bloomberg just like maybe they change their algorithms just a little bit to influence the market? Probably. I mean, why not? They're in the position to do that. Anyway, in terms of the Fed raising the interest rates, I think the relevant phrase is past behavior is the best predictor of future behavior. So in 7 years, they haven't raised the rates. What is going to happen in December? Well, they probably won't raise them again because that's what they've been doing. And, they talk a lot, but it's like when you're at the poker table and a guy's moving his lips a lot, but you have to... What you actually have to do is analyze the hand and look at how he played it, and that's going to give you more information rather than the bullshit he's talking.
Yeah. Because they're going to come very close to raising it. They could have raised it, but they didn't.
Yeah, they could have, should have, would have.
But jumping back to Glencore, this is like a big blame game, and Glencore is getting the blame for the whole stock, the whole commodities issue is getting put back on Glencore, because like nobody really knows how Glencore does what Glencore does. And it seems that way. I mean, I spent a fair bit of time on their website, and nice stories about.
What did they do with those pickaxes and excavators?
Nobody knows.
What are you saying?
Well, it's
you mean their balance sheet isn't very transparent?
Is any?
Well, it's a publicly listed company, so in theory, at least, they should be disclosing all this information in like quarterly statements to their investors.
Yeah. But I'm jumping back to like the commodities issue. Nobody really knows why commodities are dropping. Glencore can say, look, we're all on the, we're all transparent. We're doing our job well. Our company's huge. We can handle the debt. Maybe our income's not good, but manufacturing is going to increase, and we're going to pull back, and things are going to be good. And the news helps do this. The Deutschebank's helping do this.
Yeah.
But I mean, with this blaming, it's like the issue is like Glencore. Why is it dropping? Well, commodities. Okay, it's out of my control. The level of debt. Well, that wasn't really. Was that their fault? How much debt they're holding? Well, when they say they're holding debt, you had figures on how much.
Yeah. So the like original figure that came out was 30 billion. $30 billion US of debt. But then what came out later, and this is from good old Bloomberg, Glencore has $35 billion in bonds, $9 billion in bank borrowings, $8 billion in available drawings, $1 billion secured borrowings, in addition to $50 billion in committed credit lines. And so the debt to equity ratio, and they've got about $90 billion in property, plant, equipment, and inventories. The debt to equity ratio is like 1.14. So basically, if they sold out everything, sold out every single mine they had, every piece of mine equipment, every pickaxe, every lemonade stand to keep their workers refreshed, every little lollipop that they have that they're selling to the allegedly selling to their Colombian child labor, then they would still be in debt. So but it's not a great position to be in.
What I don't get is how can they say, if they did say they're 30 million or 30 billion?
What do you mean?
Like when they said, I thought of 30 million. No, it's billion, right?
Billion. It's billion. Yeah. 30
billion in debt.
Yep.
But then doing the figures and digging a little deeper,
103 billion in debt.
And this is like transparent company, right?
Mm-hmm.
So
it's a publicly listed company, but the information seems to change quite a bit.
Well, it depends if it's an asset, but you're still paying it off, or if it's an asset but you don't exactly own it, but it's yours because technically your name's on it, but they're the liabilities, that constant cash flow to pay for the equipment that you just bought to open the new mine. It's like that. Accountants can change this to make it comfortable for the investor.
Okay.
Like that's how it works, isn't it?
So, well, you were describing that kitchen sink maneuver.
Well, this was described as an activity that one of the companies that are the most leveraged in this bath time of fun.
In this shell game.
Yeah, with Glencore is Deutschebank. That apparently.
Yep. Well, oddly enough, as Market Watch reports, Deutschebank has raised the stock to a hold and has upped its target price for Glencore to £2. So they think it's going to double in price over the next, year or so. Funny how they think that. It's funny how they might think that when they're actually. What was what you dug up there?
Well, okay, Deutsche Bank is heavily invested in Glencore.
Yeah,
they're holding them above water at the moment. Glencore is a company that their primary product is losing value. So the issue is here that Deutsche Bank's been accused of doing kitchen sink maneuvering, which I've never heard of before until now. But that's where you get all the toxic assets and I guess company holdings that you don't really want, and you put them in the sink. And I'm assuming that's to flush them away before the police run through the front door.
Well, wouldn't that be called the commode maneuver, the bathroom quickie maneuver or something?
I'm just copying what the last guy said, and he called it the kitchen sink maneuver.
Okay.
But yeah, it's essentially the same thing. Kitchen sink or bathroom or toilet. You're trying to get rid of shit.
Yeah.
Like toxic assets.
So this is like, I can't remember what that movie was called, but there's a movie about the 2008 financial crisis, and they kind of discover overnight that suddenly they realize that they're significantly over leveraged, like they're holding all these toxic derivatives, and the chance that the chance that they're all just going to crash is like quickly approaching 100%. And then so they spent all that day just trying to call whoever they can and sell millions and millions of dollars of assets that are just going to deteriorate and vanish into thin air and within moments.
Margin call.
Oh, that's the one. Yeah, it's a good movie. Yeah.
But I mean, that really happened.
Yeah.
The thing is, that couldn't possibly happen again. There's too much regulation, and there's too many companies that are dedicated to auditing these companies to make sure that doesn't happen. But in this case, it appears like the use by date's already well and gone.
Yeah, yeah.
Okay, let's see. So where does that leave us? Because obviously Deutsche Bank's in an uncomfortable situation here. If something was to happen to Glencore, like if manufacturing figures do not improve and Glencore doesn't keep producing as much because it's not as economically friendly for the company to keep participating in its activities and has to pull back. You already said they're selling a lot of assets at the moment to try and to level up their debt to income ratios here.
But this is the weird thing, because the more assets they sell, actually the worse the ratio gets.
So what, they're buying time, hoping that commodities go up in the meantime?
Yeah, I suppose that's a reasonable hypothesis. Yeah, that sounds about right.
But commodities don't look like they're going to bounce back.
No, especially not if this link between the dollar and commodities is correct. Well, okay. Well, it could. Well, let's say in December, Janet Yellen comes out. Everybody analyzes her body language, and she says, and she says, "Okay, we're not raising anything." Then what happens? Well, maybe the commodity prices might rise again. I suppose, but it's hard to say.
Yeah, but that's like their only chance.
I guess so. Yeah.
Because if commodity prices...
Unless, there's probably some other factors which we haven't considered that are influencing the commodity prices.
Well, you know who's going to blame for that?
Willy Wonka. Okay, China. Why?
Because they're not producing as much. Manufacturing figures are down. So obviously they're not consuming as much raw materials to produce the same things that they need to produce for the international consumers to consume.
Yeah.
So
lower demand on commodities because of lower manufacturing. Lower prices.
That's what we're in. I mean, the question I'm wondering now is how long is it going to take for that to turn around?
Yeah.
And it doesn't look good for Glencore or for Deutsche Bank. But, they're doing everything they can. they're sending out memos to their investors and their affiliates to hold on the Glencore, because now the price has dropped. It's the perfect time to buy.
Yeah, I'm sure a lot of people see it that way as a bargain, but yeah, I mean, there's some reports coming up saying, well, they're addressing their problems, they're selling off this and that asset, and that means the outlook is good for the long term. But again, I do have to wonder, just like with Deutschebank, how much of this information is influenced by the holding of some kind of derivative that's related to Glencore. So yeah, I mean, people have described Glencore as like the Lehman Brothers of the mining sector. So Lehman Brothers being the bank in 2008 that went bust because it was selling all of these derivatives, and basically screwing up the entire economy. So, yeah. So, what do you think? What's your outlook? Is Glencore going to ruin the world economy, or just take a dent, or maybe it'll survive and chug along?
I think Glencore will keep chugging along. I don't think they're going to increase interest rates. I feel sorry for the people that have their money in the hands of professional investors that are reading these reports by Deutschebank.
401k superannuation.
Because it might hold ground for the meantime, but I think if it doesn't, it has to. This is the thing. It has to sustain its holding of the ground. Like maybe they can sell enough assets to buy themselves a year or two, and they can diversify into other things. But if they don't, then it's what we've always been waiting for, isn't it?
Yeah,
2008.
Front row seats, freak show. Yeah. Cool. So my name's Kurt Robinson.
My name's Aaron Battle.
So hit me up on Twitter at TroubleBubble.
At BattleAZ.
And head on over to Facebook, press like on Facebook, hover over the like button, press go to notifications, head over to YouTube, press like, press subscribe, jump on iTunes and Pocket Casts and Podcast Addict, and you can subscribe on there too, and leave a review on iTunes, and head on over to theparadiseparadox.com. You can leave a comment on there. Tell us what you think. Tell us what you know. Tell us if we're completely wrong, because we're just trying to feel this whole thing out and do our own research here and put the puzzle pieces together. So there might be something we've missed. Let us know. And jump on over, theparadiseparadox.com. Have a look at the donations page.
Yeah, no, nothing at all. It's just donations. And please donate.
Yep,
we enjoy doing this.
Yep.
We suggest $1 per episode, but feel free if you really enjoyed it.
One
a little more
per episode.
Why
not?
That'd be magic.
World currency, the new world order currency. And jump on theparadiseparadox.com. Up the top, there's a shop Amazon link. Buy a copy of Margin Call, or watch it on Amazon Instant Video, and Jim Rickard's Currency Wars, interesting book. And have a good one.